Good morning, folks. Today is Saturday, May the 28th, 2022. The time is now about 7:43 a.m. Eastern Standard Time. And this is Tim Davis coming back with you guys for my weekend market review. Had a pretty good week on last week. As you saw, the big rally days, huge rally days. And I wanted to start off by taking a look at longer-term quarterly charts. And just to put some things into perspective, normal markets, normal regular bull markets, are not used to seeing these huge swings from day to day. I mean, for the Dow to be up, 2-3 points, 2 to 3% in a day, from day to day. NASDAQ up about 4% on yesterday. S&P up about 3%. Small caps up about 3% in a day. And we're seeing those swings day to day to day. That's not normal active market, folks. So that means the volatility is still around. And that means there's still a lot of uncertainty within our markets. You got these big swings like this. That's enough to let you know that the uncertainty in this market is not over. It's not over. So don't fall in love with these big rallies until we finally find, that the markets are ready to come back to some normalcy. And I don't think that's going to happen anytime soon. Now, even if the war in Ukraine starts to find some type of, relief, there's still a lot of worries, folks. There's still a lot of things that's going on within our world, within our economy, that will continue to affect these markets. Now, from a technical standpoint, let's take a look at what the charts are showing us. All right, so if we look at this is a quarterly chart I'm showing you now, the Dow Jones. I'm going to highlight some things. So first of all, we got up to a high of the Dow Jones around 36,952, and as you can see, since then, each quarter, the past 2 quarters, has just been showing negativity. And looks like we are at the top of a mountaintop. If I was to stress this out, you can see we are at the most overbought we've probably been in history, or well, besides back in 1995. I'm sorry, between 98 to 99, extremely overbought. But if you look at the TTM squeeze, like we are just been on a mountain climb since 09. Straight up. And we started to get some warnings that there was some probably some breaches in the armor when we got that big COVID plunge right here in 2020. Then we bounced back fiercely, only to eke out another high, a brand new high. And then we're starting to roll over. So that could be the ultimate top for a while, folks. So don't be surprised at when you see these large rallies. That's just in my thought process, that's just a bear market rally. Try to get folks covering their shorts. Bear market rally, and I think these bear market rallies will continue to have these bear market rallies until the market finally settles at a place where we can really start to see a new bull market. Right now, I don't think we're in a new bull market, so don't get too carried away by seeing these big rallies. I think it's a great trading opportunity for traders, but for these buy and hold investors, don't sink your teeth into these big rally days, because that's probably not the beginning of a new bull market. Now, so back to our quarterly chart, we only pretty much almost round trip back to where the COVID plunge started. Now, let's show you what a quarterly chart of the Russell looks like, because it pretty much gives us a heads up ahead of time. But the Russell, perfect round trip right back to the top of that particular rally. To the top of where the COVID plunge generated. So right here, this is the Fibonacci retracement tool. You see me have here in blue, right back to the 50% Fibonacci retracement level, which is the top right here. So I'm gonna highlight that right here. right here where I just highlighted, that's where we started to pull back on the COVID plunge, and look where we came right back to it. We came right back to it on the Russell, right back there, and then you see this long stem, we bounce. Okay, folks, we bounce. Normally, when you have a moment where you see previous resistance now become support, when you hit that support level, 9 times out of 10, we're going to see a strong bounce, especially on the longer term charts. You're going to see that strong bounce, which is what we are experiencing right now. A strong bounce getting away from the resistance level. What was resistance became support once we crossed that level again from that COVID plunge. Once you hit that support level, folks, normally you're going to see a bounce, and that's what we're experiencing now. And sometimes those that bounce is going to be fierce, because we're looking at some big downturns that we've seen back during the 2020. It was a big move down, and you hit that level, you're going to see a strong bounce, which is what we're experiencing now. So what happens now? I think it's just a counter rally bounce. We get that bounce off of the from the COVID lows, the COVID highs, high point. We get a bounce, and I think that bounce is probably going to be short-lived. So we may see a little bit more rally over the next week or so. Next week is going to be a short trading week, so we may see a little rally over the next week. But I'm going to show you some of the shorter-term charts to show you where we could be rallying to, and possibly having a pause, and start to possibly break below this level, break below the high point of the COVID plunge, where the COVID plunge started. If you look at the S&P, same scenario, and this is the also quarterly chart of S&P. You can see how extreme this up move was from the COVID plunge, and it looks like the TTM squeeze, like we just starting to get pulled back, folks, on the long-term chart. So we probably got a little ways to go. And I like to try to look at history, because sometimes, even though you can't dictate past experience, past performance on future performance, but they sometimes mimic each other, or sometimes show some resemblance. And I want to highlight this area right here. This area right here I'm about to highlight is the area during the 2008, 2007, or 2008, 2009 pullback. If I can get this mouse to act right. Okay. So here's a quarterly time frame, 2007 or 2009. We got up to that high in 2007. Look what happened. Quarter after quarter after quarter, we started to pull back. And stand by 1 second, folks. So we started to pull back quarter after quarter, and what I'm expecting is probably the same type of scenario. From 2007 to 2009, we've seen 1, 2, 3, 4, 5, 6 straight quarters of lower prices. Look back in history to my left, from 2000 to 2002, same type of scenario, multiple negative quarters. We were seeing lower prices. I think today is no difference. I think we're just at the beginning stages. So if we look at quarters as they're unfolding right now, beginning of 2022, first 2 negative quarters are one is already in, one we're in now. I think we're probably going to see the same thing. You're going to have these snapback moments, which you see these long stems, the same way we see long stems on the quarters that I just showed you back in 2007, 2009. Those are just snapback areas where we just get oversold, then we snap right back to a certain level, then we start a new downtrend. So I think we're going to see the same type of things unfold. And how long this lasts, nobody knows. But there's still a lot of things that that's going on throughout our world that is still going to affect the overall movement of the markets. And I still think this bear market is still in full effect. Don't get fooled by these counter trend rallies or these bear market rallies, thinking that's the end of our troubles, which I don't think that is. Oh, something else. All right. Now, let me show you some tools that can help us determine where we can see some short-term rallies and end of those short-term rallies. Let me go to the SPXA. SPXA 200R. This is a tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. Now I'm gonna show you where I think we're ultimately going in the near term, and then see what happens after that. Let me switch this to a let's go to a 20-year weekly. All right. All right. So this tool pretty much tracks the percentage of S&P 500 companies trading above that 200-day moving average, and we have been in a downtrend since we got to as high as almost 100% of S&P 500 companies trading above that 200-day moving average. We've seen that 97% back in April of 2021, and since then we've been in this downward trending channel. Okay, now we are at the bottom of this downward trending channel. So what we more than likely expect again? It's a rally. So I think we are probably going to see a little bit more upward movement in price action of the overall markets, and this tool tracks the amount of companies that are starting to trend back up towards the 200-day moving average. I think we could probably see this move up to around 45 next week. Then we have to see what happens at that point. Then I think we're probably going to that'll take us back up to the top of this channel. Then we're probably going to start to pour right back down. Ultimately, what I think is going to happen, I think we're going to see. Let me go back here. And I have my ultimate target down here around 0%. I think we're going to see 0% again, folks. That's just what I believe. We're going to see 0% like we've seen in 2020, like we've seen in 2020, like we've seen in 2009. 2009, we stayed down there for a bit, and also like we've seen, if I was to go back further, in 2000. So I think we headed back to this level. Again, this is just a snapback rally that we're in now. I think that's going to fizzle out eventually, sometime towards the beginning of June. So that's that tool. One more thing we can take a look at is paying attention to the VIX. The VIX can also give you some type of parameter where we could be heading next. Again, my ultimate target for this VIX, I think we're going to break above 40. So I'm still keeping that target in place. If we look at a daily chart, I'm going to look at a daily chart on the VIX. Want something out here. All right. So in the near term, it's a daily chart of the VIX. You look at the full stochastics, look at the wins percentage, and hitting oversold territory again. Normally, when we hit those levels on the wins percentage and the and its full stochastics on the VIX, normally we get some kind of bounce. Now, I highlighted this area because this area already, this is an area where I think the VIX is probably headed to. And we got to see where we go from there. So that's between 2450 to 25. We hit this area. We hit that area before multiple times, on the way up, and we got, on the way back down, and we got a bounce. We've seen it here, happen here. We've seen it happen here. Previously, that area was an area of resistance. Back here around April, we hit it, pulled back, hit it here, pulled back, hit it here, pulled back, and we finally punched through it. So now, previous resistance becomes a level of support. Now we have to see if this is going to hold. This area is going to hold, which I think we probably could. And again, we're already hitting some oversold territories on the VIX. So sometime next week, we start to drop below the VIX starts to drop below 25. Start looking for a possible counter trend or a possible reversal back to the upside. And what does that mean? That means if you get a reversal back to the upside on the VIX is a tool that's inverse related to the S&P. So We see starting to see a bounce in the VIX. If we get to this area, that means the overall market, especially the S&P, is probably going to start to pull back. All right, so that's something to pay attention to next week. Pay attention to the VIX. It's a short trading week next week. Pay attention to the VIX. VIX get down here, but below 25. Start looking for a possible bounce. If we don't get that bounce and go lower, then that could mean that the markets go much higher. But I'm looking for a possible bounce in this area on the VIX to see how that pans out. Now, if we look at the daily chart on the S&P, and I am going to switch to another chart format where I have my moving averages on here. I want to point something out. Of course, like I said, we got oversold on the major indexes, and we are starting to see these counter trend rallies, these bear market rallies. We are about to approach the 50-day moving average on all the major indices. So we're getting close to that 50-day. So I'm looking for price action to be muted. So sometime next week, again, I see we might go up a little bit more, but we are starting to approach a level of resistance just around that 50-day moving average. So if we don't punch through this and go up to all-time new highs, I don't think we are. We're already seeing the 50-day cross below the 200-day well back in May. I think we're going to continue to see these moving averages start to run into price and then just continue to turn downwards and to see how that pans out. Again, that is going to be an area of resistance, strong area of resistance. Once price action marches up, starts to run into that 50-day moving average, I think we're going to start to see some pressure on the markets. Take a look at the other indexes. You're going to see the same type of scenario. Here we are. Full wins percentage already in overbought territory on the Russell. Full stochastic is in overbought territory as we start to approach that 50-day moving average. I think that 50-day moving average is going to act as a strong area of resistance. And if we look at the Dow Jones, you're going to see the same type of scenario. And the Dow may be heading back even sooner. Dow's already starting to approach that 50-day. So it could go a little bit higher. I definitely don't think we're going above that 200-day, and then we could probably going to start to see some resistance in the Dow sometime next week. So pay attention to that. I do think we can go a little bit higher, but I think it's going to be muted real quick. So probably towards the end of next week, we may start to see this rally start to fizzle out. And not only that, folks, look at the let me show you guys this, because this is another thing that also could tell you that this rally may be almost done for. So since we started to march up here around the 20th of May, look at the volume. These volume bars, they're getting shorter and shorter and shorter as the market is rallying. So as the market rallies, volume is petering out. It shows you that this bulls are probably getting exhausted. Volume is petering out, rally still is in place. Bulls are starting to get exhausted. So that's something to pay close attention to as we go into next week. So just be careful and just be ready to to ride the other direction. So that's the Dow Jones. If we take a look at the NASDAQ, same type of scenario, nothing different. Approaching the 200-day moving average, the 50-day moving average. So we're probably going to start to see some type of move back to the downside. And if you look at the triple Qs, also the volume looks a little muted as we start to approach that 50-day moving average. So again, they were a little bit higher in this bear market rally. And let's see what happens once we start getting closer to that 50-day moving average. All right, let's look at one more sector that I'm really intrigued about, which is crude oil, because I think crude oil is going to be a telltale sign. We probably won't see capitulation, folks, meaning that until it might be for a while, meaning that people start to sell everything. That may not happen for a while because we look at a longer term chart of crude. I think crude is in store for a nice little breakout. So a lot of these energy stocks are going to start to do probably following crude higher. Let me okay. It's right where I want to be, just about. Here's a quarterly chart of crude. So if you see back in 2008, we got up to as high as 147, and that's when everything started to fall apart. I think we could be headed back very close to that level. And if you see this quarterly chart, we pulled back a little bit last quarter, and we're starting to try to march back higher again. Again, here's another look at it. By looking at a monthly chart, we're starting to hit the overbought territory on the RSI, but I think that's going to be, we can go even much higher than that till we get extremely overbought. We start to hit up, if we make it back up to around that 147 level on crude, that's when I think we can start to see everybody sell everything. So we have to see how that pans out. And that's when we can start looking for major downturns in the market. That may be for a minute. And look at a weekly chart on crude, you can see how we were in this consolidation phase for quite a bit. Once we hit to that 129 level, we started to consolidate. And it looks like we are starting to round, like almost a cup pattern, handle cup. Like we're starting to round back up. And if you look at the full stochastics, you can see it starting to point up. This percentage is always pointing up, RSI is pointing up. So like we are ready to continue this move upward in crude and possibly break back above or break out above that 129 level. We have to see how that pans out. But I think that's why a lot of these energy stocks folks are doing well. If you follow me on Twitter, I'm pointed that out too. But I'm starting to see a lot of unusual option activity in a lot of these crude oil stocks. A lot of these stocks that follow oil. And also, look at the gas pumps, folks. I mean, prices are getting higher. And I think by midsummer, most of this country is probably going to see gas prices above $6 a gallon. And, I mean, it's getting outrageous. And again, once we get to those extremes, you see what happened in 2008, 2009. We get to those extremes, and then we see a big washout and everything start coming back down. So until we see those gas prices, oil prices really get extremely high, we're probably not going to see a big washout in everything in the market until those oil prices get extremely high. But also that puts pressure. That's going to put pressure on the overall markets, these high oil prices. All right. With that said, I think that's all I wanted to point out. I think I went over the VIX. Yep, went over the VIX. So I gave you guys some things to pay attention to. Just a bonus as to some changes that I had to make to my portfolio to try to keep up with where the money is flowing. So there's a lot of stocks, folks, that show some outperformance over this past week. Probably going to continue to see this outperformance in some of these stocks, these big moves. So for you traders, if you're paying attention to some of these oversold bounces, you can find a way to make some decent returns. Some of these oversold bounces, and then those folks who did not take advantage of these oversold bounces before this rally started to happen. There's plenty of ways you can still make money in this market. And one of them is by, I'm telling you, attack this energy sector, because this energy sector is, I think it's about to show some outperformance. And some of the positions, or some of the things that I saw, or companies I saw that show some unusual option activity on last week, Baker Hughes was one of them. And if you look at this weekly chart of Baker Hughes, look at the full stochastics, it's just starting to turn back up. Williams percentage starting to turn back up, the RSI starting to turn back up, and Baker Hughes is starting to turn back up to make a run back towards that 39.78. So I think that is a clear area where we can see a possible breakout. So here's resistance level, right around that $40 level. I think Baker Hughes is ready to take a challenge that and possibly try to break out above that level. Another one that I saw some crazy unusual option activity was Cosmos Energy, same type of scenario. 836 is the level. Looks like it's starting to make a run back at that level. You can see we had a nice green week on last week. And look at the full stochastics wins percentage RSI starting to turn back up. So we could be in the process about to see a breakout there. Also, there was another one. I mean, you can just go down a list, but these are some ones that I just saw some unusual option activity, which I started to just jump on top of. SWN was another one. Saw some crazy unusual option activity in this one. I got this one before we got this big move, and look at that. This was the breakout point, which is right around that $8.64. We are above that level. I think we have much more room to go, though. Here is a monthly chart of this particular stock. Again, we are at the low end of the range, and I think, I don't know where this is going, but I'm in it with some possible much more room to the upside. Now, if we look at where we got up to in 2016, we were as high as $16 before we start to pull back. So do we go that high again? Anything is possible with some of these oil stocks. Just in case, I'm already in. We're starting to hit some overbought levels on the RSI. So we had to see how it pans out, but I think we still could go a little higher. That's SWN. Another one. EQT was another one to show some outperformance. And I think this one could really start to kick in high gear. This one has a possibility, folks, of probably a challenge that high that it's seen in 2014, which is around the $60 level, which would take it to extreme overbought territories. And then that would probably see a reversal. So that it pans out. But I think it's making a run. Pretty strong candles on this monthly chart. Go back to a weekly chart. We are just like we're starting to break out again. He broke out about a $45 level, and that was a new move higher after some consolidation. And let's see, one more. And then you take a look at the USO itself, which is the Crude Oil Etf. USO itself, Crude Oil Etf for the United States. And again, it's just been trickling higher, and it too was consolidating for a bit. And it's like it's starting to kind of trickle higher, folks. Trickle higher. You see the full stochastics win percentage all starting to point up. Do we fill this gap? We already filled this gap here, but do we go higher? We filled this gap here. It was a gap here. It's a gap that I just highlighted. There's a gap there. That gap like it was filled. Move that. Round drawing tool. So there was a gap down right here. We are above that gap. So since we have cleared that gap, do we go higher and go up to at least 90? That's a possibility. And then do we go higher and hit that 106? We shall see. But right now, it's in a nice uptrend, and I'll stick with that trend. So I think that's all I have to add. And for folks who wanted to try to find a way to take advantage of some of these up moves, I think crude is where you can do it. Again, we may see a little bit more rally in this market next week. One stock other than crude that shows some really extreme unusual option activity was ChargePoint, folks. I think this one may be still in the process of the counter trend rally on to the upside. So let me this one has already hit some oversold levels, so it could be in look at that. This is weekly chart. All these reds in a row. Red still light. 1, 2, 3, 4, 5, 6 red weeks. 6 red weeks in a row. And we're starting to see a move high on ChargePoint. This one could be in store for probably another little move up, maybe back up to around 15. Where we're at now, close to around 15, maybe even a little bit higher. But this will show some crazy unusual option activity last week. It's already up big, 14%. But as you can see, when these markets show these crazy counter trend rallies, these large swings. And we can see even more of these large swings before we start to see a pullback. So that's something to look at for a quick, and I do mean a quick trade, because if it jumps up another 13, 14%, I can almost guarantee you we're probably going to see some type of reversal to the downside. Now, to set up for the next move down, there was some unusual put option activity I saw too, folks. I saw some unusual put option activity starting to form in the TLT. Again, I think some of these moves, once we see this move up, TLT may even move up towards 128 to 129. I think we're probably going to see a pullback. So I saw some unusual put option activity there. The IWM has been showing a lot of unusual put option activity. So watch that carefully. I think once the IWM finishes its near-term rally, I think for sure we're going to see a pullback here. Oops. Let me do that just a little bit. So I think we're going to start to see once this because here is a trend channel that IWM is currently in. So I think once we hit the top of this channel, you maybe see the IWM go up a little bit more, maybe around 193, 194. I think we're going to come back down to the bottom of that channel. That would probably explain a lot of the unusual put option activity I've seen with contracts expiring in I think August. I've seen some in June. Here is look at that. Some June contracts and some August contracts, June 17 contracts and some August contracts on the IWM on the put side. People are starting to load up for the possible counter trend rally to start to peter out. So folks are starting to play the downside with some put option protection in the event that we start to see this rally peter out in the near term. So folks are really starting to pile back in some of these positions back on the put side in advance. I'm waiting a little while until I can see some oversold levels on the VIX. All right, folks, I think that's all I have to share with you guys. Again, pay attention to the VIX. Look for some oversold levels on the VIX, and pay attention to crude oil. That's a nice place where you can still see some big oversized returns and some oversized gains. And pay attention to the overall breadth of the market, folks. I did not show. Let me go back to it because I did not. I meant to point this out. This is the this when you know we were in a strong rally on last week, folks, because I pulled up this tool that you guys know I look at on a weekly basis. This is the tool in the Wall Street Journal, and you can see this link pinned to the front of my Twitter page. Come here, I watch this every day to take a look at the new all-time highs versus new all-time lows. And ironically enough, on Friday, look at this, 88 new highs on the New York Stock Exchange versus, drum roll, 36 new lows. So that was a change for now. But when I started looking through these new highs, they were mostly energy stocks, folks. So energy stocks have been outperforming in a big way regardless. Now let's switch to the NASDAQ. NASDAQ a little bit different. 50 new 52-week highs. And still 116 new lows. So it still goes to show you, even in a big rally that we've seen on last week, NASDAQ is still underperforming. All right, folks, that's all I have to share with you guys. Hopefully there's something you guys can use. And until next week, I'll catch you guys on the next video. Enjoy the rest of your weekend and happy holidays, everybody.